I love it. You guys are keeping it going. Yeah, how about that for a security panel? Like Zach, thanks for bringing the energy, and everyone. Next up, what we have is a panel on. We've got Jacquelyn, Kelly, Jeff, Amos, and Maria talking about investing and genius or mad science.
Thank you. Yeah. Hi, everyone. I'm Jacquelyn Melinek. I'm a senior crypto reporter at TechCrunch. We're going to have fun today talking about investing. As he mentioned, we have everyone here with us. If you want to just give like a quick intro.
Sure. I'm Jeff Ren from OKX Ventures.
I'm Kelly with Pearl River Venture Capital and Mint Gold Dust.
Hello, everyone. My name is Amos. I'm from MetaWeb Ventures.
Hi, everyone. My name is Maria. I'm with Electric Capital.
That was the quickest intros I've ever gotten. Thank you, guys. I appreciate it. To start, I guess, like, what is your kind of overview right now in the investing space? Like, obviously, last year was really crazy with everything that went on, but investors aren't really heavily affected by it, I feel like. Their strategies stay the same. They hold out to, what they're doing. So, for each of you, what are you investing in right now across, what stages and sectors are you really focusing on?
I think it depends on what type of investor you are, how much you have to invest in the market, but also at what stage you invest in, and that makes a big difference in how you're affected by the market, especially if you're solely funded like myself.
Yeah, I think we are a corporate venture arm for OKX. So last year is crazy, but as most of the people around here would know, it's not the craziest time ever for crypto. So I think we've been seeing some ups and downs. From our perspective, it's really to enable the entrepreneurs and the community in general to have more mass adoption and to improve the security for the protocols or networks, and I guess just try to involve more people into crypto. I guess that's our intention.
For us, the bear market is actually great because I think we're probably the smallest fund on the stage right now. We raised only about $30 million USD for our fund one, from the likes of Sequoia, 7X, JSR, Dragonfly, etc. So almost kind of acting as a fund that works with lots of other funds, and our really niche is actually on early stage investment, and we tend to spend a lot of time on helping the project with their post investment across anything from fundraising, marketing, product engineering, etc. And the reason why this bear market benefits a lot is actually that allows builders to spend more time on product. It's not as as speculative as from before, and also give us much more time to do due diligence. So we embrace the bear market.
So Electric Capital is an early-stage crypto-focused VC firm. We invest in seed and Series A. We were started in 2018, and I watched ETH go from all-time highs to $80. So I think one of the things that's really unique about us is two-thirds of our team are engineers. Everyone on the investment team, myself included, has an engineering background. Everyone has either started a company or has been early stage at a company. And so, I think it's, for us, this bear market is really a lived experience. And the thing that we really focus on, that we've been pushing since 2018, is to focus less on prices, but look at the fundamentals. The fundamentals to us is the number of developers in the space. So we put out something called the developer report every single year, and it's very clear that by the end of 2022, prices fell 70% and developers grew 5% year over year, right? It's very, very clear to us that there's something very important and interesting happening in the crypto space, and so for us, we are not at all affected by the market conditions, and we're still deploying capital very rapidly.
That goes into my next question, Maria. It was basically, Given everything that happened in the past year, what do you think will change in regards to capital deployment in this space for funds and investors in general? If it's not affecting you guys, like what have you been hearing?
I'm curious what you all think, but what I've seen is that early stage is still happening. Pre-seed is very active, seed is very active, Series A, all these companies are still able to raise. Where I've seen a little bit more difficulty is with Series B and beyond. So anyone trying to raise $20 million or more, I would say, is having a slightly tougher time in this environment. And that's and that's because a lot of the times it's the crypto native firms that are still in the space.
Yeah, I think I invested in Block Apps in 2017. It was the first blockchain as a service. We took it to market, Kieran James Lubin's company, and that was at the beginning of really where a lot of developers coming from the Web2 space really started to dive into the Web3 world, and I think that first bear market after 2017, it really hit some of the developers hard. A lot of people that came into the space during 2017, 2018, by the end of 2018, they were going back to Web2 and they were losing their positions in the Web3 companies and the startups. And so I think that we're going through that slump right now again, but there's a lot more developers in the space and there's a lot more projects in the space. So for me, it's really beautiful to see a lot of startups. I mean, it's so beautiful to have Buffercorn Ventures and ETH VCs just coming here to pitch. This is my 6th ETH Denver, and we didn't have that to begin with. In this space, we didn't have multiple startups, Web3-based, blockchain-based companies looking for funding, in 2017, 2016, 2015. And so it's really beautiful to see that this bear market, coming full circle around in this cycle, 4-year cycle.
Yeah, so for us, I would say a very similar experience. As electric guys, we still see lots of, relative lower valuation, early stage deals, but definitely some of the later stage deals are having a bit of trouble to raise money. But in general, at least how our thesis and philosophy kind of work right now is that once again, the reason why we embrace the bear market is that because there are much less speculation compared to maybe a year ago. Valuation actually becomes much more reasonable. It's almost kind of automatically filtering out a lot of the entrepreneurs and builders who not necessarily have enough persistence to build a good project, right? So myself was actually a serial entrepreneur before doing MetaWeb. I did multiple companies across public chain, payments, SaaS. Raised, I think all the companies that participated raised probably maybe more than $300 million at this point. But one thing I learned is that it was super difficult to become an entrepreneur. There are always things that just happen that you just never realized, didn't expect. And I think, for those guys who ended up really succeeding, you just need to have the heart and drive to actually, push through all the challenges, right? So once again, I think the market is definitely now super good for entrepreneurs. But then again, I think crypto blockchain still has a really good potential. And I think in this market, we might see some of the best project has the most potential that can actually define the narrative for the next bull market.
Yeah, I think people say that bear market is for builders, for building. I feel that for entrepreneurs, the bear market would make a lot of projects become more focused, less distracted by the the noises, the billion-dollar valuation that their competitors that hit to, right, running around for fundraising and all that. I think right now the market is keep everybody honest and rational when it comes to your buildings and milestones and execution. We as a firm, we have a deep belief that our dollar is not greener. That's how we talk about this, things like this. So we want to be value add, and we want to be able to enable some of the projects when it comes to on-chain data, we have OK-Link, which is accumulated over billions of address labels and 26-ish public chain data, be it transaction or smart contracts or NFTs. So these becomes very powerful tools for our prospective partners or portfolios. Just name a few. We also have started become very popular in the market, our Web3 wallets, and so this is for entrepreneurs, but also I think we all see in the past, I would say 18 months or so, there are more and more traditional companies coming to this so-called Web 2.5. Want to feel it, but not dedicated or don't really understand blockchain or crypto. And I think we find different solutions working with these players. I think that's another way that we want to enable the traditional business into the, I guess, crypto world.
And how competitive are deals today from a venture perspective, like compared to a year ago or 2 years ago? What are you guys dealing with now?
I guess we go both ways.
Go ahead.
As a firm, we believe we pay, market for the deals. So whatever the market feels, prices, we just join the effort. We, I guess, we don't feel it's too competitive. I think if we decide to invest, usually, with our value add, the projects would want us to be part of it, either getting the funding or getting some of the support that we can provide to them. So we actually work with entrepreneurs and venture capitalists, all together on very, very friendly terms. So I certainly wish we can continue that way. Yeah.
Yeah, I think it's really interesting to try to find startups right now in the market to invest in, because there's a lot of new developers that are moving from one company to the next because we've had to make some shifts. The larger startups within Web3, the larger companies within Web3 have laid off some people. So we're finding that the startups can get those developers and they can start to build. Now they're desperate for getting the funds to pay these developers. And so I feel like there's a lot more startups in the market that need funding. It's just there's only a certain number of skilled Solidity developers still, and that's one of my biggest challenges is when I go through and I evaluate startups, I always ask about their developer and their co-founders and their founders and their product, and last but not least, their business model. And if they don't have the right business model and the right structure, it's really difficult for me to take them to market or invest in them. And so from that perspective, that's the difficult part for me, but there's a lot of startups out there in the market, if that makes sense.
Yeah, so I would say I have very similar feedback. So just not going to repeat. But one thing I would like to add and touch upon is that I definitely see more and more entrepreneurs and definitely much more capable entrepreneurs in the past 2 years compared to before. Because I started in crypto all the way back in 2013. I would say the quality of entrepreneurs and projects are just still growing at exponential pace. So for example, we invest into a project called Niche Protocol. So believe it or not, one of the co-founders was actually the guy who invented the swap function for Tinder. So he was a co-founder of Tinder and then co-founder of Bumble. So they're actually building a new social network that essentially bring a Web2 super easy onboarding, really good user experience. But behind the scenes is actually a DAO that offer lots of the features that unlike most of the current like DAO infrastructure really is like DAO product built by engineers for engineers, right? But what we're trying to say is that definitely happy to see more and more of those really strong Web2 entrepreneurs right now actually converting into Web3 and starting building much more powerful, especially app layer product, maybe compared to before, which is probably still focused on infrastructure, right?
Yeah, the co-founder of Niche Protocol, he invented the swipe left, swipe right. I just found that really interesting.
Yeah, I'm sure most of us benefit from that at some point.
I'm sure you guys have seen the memes where it was like, oh, last year, funds were investing in crypto, and this year it's all about AI. And obviously, you are all like crypto-centric, so that doesn't apply to you guys. But do you think it's a good thing or a bad thing that the people who kind of bought the hype, came into the space, invested, and then kind of left when things became not so sexy, left? Or is it a bad thing that we're losing those people that weren't in this industry but were investing in it for a brief period of time?
Yeah, I mean, we like to invest in things that are super weird. And so, I think for us, it's always been about, like, if money is programmable, it's not something we've ever seen before. And so it kind of follows that the large opportunities or the companies or protocols or teams that are building on top of it should be building primitives that we've never seen before and mechanisms we've never seen before. And so we really like to fund things that look super, super weird and just kind of like fun experiments. And so, I think as a result, there's not always a lot of overlap with traditional VCs because it's just we don't look at things the same way that a lot of non-crypto VCs look at things. We evaluate things differently. And I think as a founder, to your question of like, is it bad? I think as a founder, it's probably a good lesson to look around and see who are the people, who are the investors who are going to be with you the whole way and who do you really want to work with. It's such a long-term relationship to have someone on your cap table. And this is not to say that like traditional, it's like only take crypto native money, don't take traditional VC money. I think that's absolutely not what is, what I'm saying here. I think it's really about, who do you really want and need, and who do you think will be with you the whole journey and will understand when things understandably need to pivot. That's probably, the right thing to look for, the right mix of things to look for.
Yeah, sir. Yeah, I guess just to build upon that, I totally agree. So for example, we have another project called Keynote Protocol. So we were actually the only crypto native investor. The other investor was actually Sequoia US, but more on the consumer fund, and Slow Venture, who obviously started to invest in crypto. But once again, the more Web2 team that actually did the investment. The platform itself is like a utility NFT type of platform that try to help filmmakers to raise money, but behind the scenes also have a really interesting law and legal framework behind the scene. And the reason why we purposefully help them design the wrong structure is just like what Maria says, that it really depends on what you build. But if you really want to build like a Web2 or Web 2.5 project that actually take advantage of crypto, you probably need help from both directions, right? So we can help those guys, with a lot of the crypto stuff, where they're, Web2 investor can help them with a lot of, the Web2 adoption, making intro business. So my advice, obviously, for entrepreneur is that if you're building such a product, definitely, try to get a different type of investor to invest, who also can, maybe spend time to help you. But then again, another word of advice is that obviously for a different investor, you might need to cater the pitch a little bit, differently, just because people have different seasons as investors. So.
I like really weird stuff too. I like the fact that you said that. I was one of the first investors in Super Rare, and at the time when crypto art wasn't NFTs, that was kind of weird. And making smart contracts for art, it was kind of a weird thing. And Yeah, so I got to be the first investor with John and Charlie Crane with Super Rare, and I was the first investor in Illust Space. I kind of like to be the first with the weird ones. And Illust Space, Illust is Illust.ar. They're a geo-anchoring of media and NFTs, on a map. And we actually did with ETH Denver, Illust Space, and Mint Gold Dust partnered to do a culture walk. So you can actually walk around this event space and try to look for NFTs. They're actually fundraising right now. I think they're pre-Series A still,
Plug.
But don't quote me on that. But anyway, I like the weird and the wonderful, but with Web3. And I really like infrastructure companies like Basic Block or Gilded Finance.
Yeah, we at OKX always hold dear to our heart thinking that we're a technology firm. And we want to say, it's a little bit cocky, but we're a firm of blockchain, for the blockchain, and by the blockchain. The first step we took was to create a very trustworthy and efficient trading system, a marketplace. Now we're venturing into building the Web3 products. As I mentioned, the wallets, the gateway to different DeFi protocols, NFT marketplaces. And with that, we're also learning to contribute to the community. And we're learning how to become a trusted member of different DAOs, notably Gitcoin DAO. We have our friends in the audience, and this is the largest Ethereum developer community. So we deeply believe in blockchain. Now, in the media, I think usually there's exaggeration of things, right?
What do you mean?
So at one point in time, okay, blockchain, crypto is great, evil, whatever. Now AI becomes a big thing. But if we all want to refresh our memory, a couple of years ago, I think different firms have a very similar AI tools. But at the time, if you ask certain politically incorrect questions, and there's certain answers pop out of it, and made that effort become, very under a lot of pressure, I guess, socially. Now I think the society has progressed. People become more tolerant for certain errors that quote-unquote technology can make. Human beings are incredibly intolerant for so-called defects by the technical development. I think that applied to AI. We're glad to see that AI now has more widely, acceptance. Therefore, we deeply believe that blockchain one day will be as widely adopted and accepted as AI or big data in general, or if we remember in early days, the internet, right? So, yeah.
All right. My last question for you guys. We have about a minute left. So 1 or 2 sentences. There's probably founders, builders, people in this audience who are looking to raise capital. What would be your advice to them?
Ooh, I'll take that first. I really want to see a business model. I really want to see a strong team. I don't want to see a lot of money pre-Series A put into marketing. It's just, I haven't seen really great companies that put a lot of money into marketing to begin with. Really great infrastructure, technology. Make sure that you are building on a protocol with a consensus algorithm that is strong. Those are the things that I really want to see. And I really want to see a lot more diversity as far as founders go.
I generally like to see something, I think a lot of pitching is narrative and it's storytelling. And so a lot of that is understanding your audience, right? And I think different audience members will want different types of narratives and stories. At least the things that I'm looking for is something new that hasn't been seen before and why that thing hasn't been built yet. Generally, again, we invest very, very early. And so at that stage, it's really an experiment. And so what I'm looking for is a founder who almost thinks of things like a chess game, where you can predict, you can kind of like logically move through the steps to see what things look like 5 steps ahead of time. And if you take things to its logical extremity, what does that mean and what are the implications? And that generally means that you have a very, very well thought out plan. I understand that, a month after we talk, the plan will probably change because the set of assumptions that you start off with will inevitably fall. But I want to, I think every single time I talk to a founder, I want to understand what that set of assumptions are and how you will go about testing those assumptions. And so to me, I think that's generally how my conversations go and things that I look for.
Yeah, so we're definitely like to see more innovation, really, weird, project for that as one else. But I guess one more thing that I'd want to stress a little bit is that, historically speaking, most of the blockchain entrepreneurs tend to be really, really technical-driven guys, right? But I think we're already at a stage that we actually need to build like actual product that people want to use. And that's also kind of aligned with my previous background, which was a little bit of dev, mostly product and marketing. So I really want to see a founder who really thinks through what they're trying to build, trying to get like good product market fit before spending tons of money, like build a protocol that looking for solutions instead of like the other way around. So that would be like my advice. Yeah.
Yeah, I would say in general, only in general, buy side has some unfair kind of an advantage on information and probably knows the deals, deal flows, market in general. So I would highly suggest the founders, entrepreneurs, focus on the execution, ideas, focus on telling the story about the technology, about the product, about the milestones, execution. And to us, asking very specifically, what do you need or expect from us as a partner, not just like an investor. We love that. We don't need more narratives. We don't need more, 星辰大海, right? It's 诗和远方. That's Chinese, basically equals BS. So we don't need any more of that. We just need more meaty, concrete stuff that we can build all together.
Wonderful. Well, thank you, everyone, for listening in, and thank you guys for sharing your thoughts today.
Thank you.
Thank you.
Thank you.
Thank you, guys.